The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
Good afternoon, traders. It's a gorgeous day. Going to be about 82 in Clearwater, Florida today, and it is Employee Appreciation Day. If you have minions, I think it's time that you appreciate them. We have minions here at TFNN, and I'm sure we appreciate them when they're paying attention, but I think sometimes they are. So anyway, I'm just giving a little hard time to Al, our engineer, who always helps us bring the Power Trading Hour to you every day. Well, every day we do it, I guess, Monday, Wednesday, and Friday at this time. So just another gorgeous, wonderful day at TFNN. So as we go along and have a wonderful appreciation day for our employees, on my radar, we're looking at a market that seems very quiet at the moment. It's having a nice little pullback. Let's see, let me pull a couple things up while we're thinking about it. But what do we have going on? I'm thinking we probably are going to have maybe a little bounce out of the marketplace. Right now we've got the S&Ps off 4 on 4.5 on low volume, 2.5 billion shares. We had higher volume on Thursdays. We went up about 4 billion shares. Looks like we're going to probably do something like about 3.4 billion down. So it looks like we're building a little bit of energy to possibly go and break out of break these highs. And if we break them on higher volume, then we'll wait for a retrace and go long again. If it's what I think it's going to be, we're probably going to have a short little spike and then maybe pull back into this trading range. I would love to see a pullback down to the low 1300s, 1302, 1298 on the S&Ps, so that we could go back at it again. But it may be a little bit longer. We've got fund buying for what's today's 2nd, so we'll have fund buying into Monday. Options expiration and going delta neutral starts on Wednesday. So we've got that part. Normally there's a bullish bias 80% of the time in that 8 days before expiration. Of course, on Wednesday next week, the option market makers like to go delta neutral. And in going delta neutral, they basically take off any risk between then and expiration. Let me do one little bit of housekeeping here. And that is getting back in the den. And we'll be in there in just a second. And also getting some things handled here. Let me get this down for just a second, and we'll be back for all those people that watch us in the den. But it is just, there we go. And then we'll get you guys back on Tiger TV. So we've got our technical difficulties handled. But anyway, we've got options expiration starting. We've got the Apple iPad rollout. That's supposed to be, Wednesday, Thursday next week. That should put a little fire under the NASDAQ. We've got many stocks that may be making an ABC up. They at least are going to try one more time at the top. I found a lot of stocks that had been pulling back over the last week and a half had done a 50, 60% retrace. And most of them look like they're going to be testing a little lows on lighter volume today. Found a great deal many that are at significant lows on lighter volume. That all makes me think we're probably going to have some kind of spike. That spike probably going to come short and sweet, probably going to take us to like 1398, probably just a shade off of 1400. If we get an intraday reversal on it, then that's probably the top of the market. we have more IPOs. We're going to talk a little bit about that in the next topic, but there is one out today. But it continues. We continue to see IPOs coming out and them finding a market. Today, that IPO is Yelp. Yelp attracts 66 million unique visitors and 25 million reviews at the end of just about 2 months ago. It hasn't ever made any money since 2004. This is another one of these IPOs that I dislike. I think IPOs are money to help your company grow after it's become profitable and you've proved your business model. 2000, 2001, and the dot-com bust was all about speculative episodes where unproven business models continued to thrive and to the ridiculous. We've got a little bit of that happening today. I didn't see where it had gone to. Let me actually check here. So if we can get a quote on Yelp, Y-E-L-P. And yeah, up $24.66, up $9.66. Actually, somehow I put it in here twice. $48.78, right in there, up 65 cents. It's another one of these sliver deals. They just let out a very small amount of the shares. In fact, they purposely cut the amount of shares off by about 40% of what the actual underwriters wanted. That's to make this thing pop and get the little chum in the water and get those sharks going. The one thing that really bothers me about this is that they haven't been able to make money. The whole idea of just getting a bigger truck will finally scale into profitability is something I've never liked. But I'm probably thinking that we're seeing the top in Yelp for the next year. The lockup period on Yelp is 180 days. So looking at the 1st of March, we're probably going to be looking at 1, 2, 3 plus 6, so 9. September 1st, something like that. We're going to see these shares come out and actually have a real market, not a restricted market on Yelp. But there's two things that kind of bother me about its business model. One, you give reviews about people like lawyers and doctors. They have the ability to sue you. This isn't like some little guy out there saying that he hates AT&T because their service is horrible, or he doesn't like Sprint because they screwed him on a cell phone. But when you have a big voice on something like Yelp, you can actually truly affect these people, and the whole liability issue continues to be somewhat problematic for people giving reviews. They have guidelines on Yelp, but it continues to be a problem where it's not like you going up against a monster company that just ignores you. You're going up against people that may have a huge financial interest in what you say on Yelp as the reviews come in, and it may be worth their time to come after you. And Yelp, as far as I can tell, doesn't indemnify you about anything you say about particular companies that you review on their bandwidth site. Probably the most interesting thing I've seen since the beginning of the year came out this week in the New Journal of Physics. It is a way of basically having a huge amount of bandwidth where we had basically one channel before. Kind of in almost a deja vu all over again. The actual errors to the original inventor, Marconi, actually has put some money together for a Institute of Higher Learning in, I think it's Pablo, Italy. And what they found out is that they've been inspired by, if anything, they've been inspired by, guess what? Pasta. Yes, that little corkscrew kind of pasta. They found out a way to actually make radio beams act and spin in space. And while they're claiming basically an infinite amount of bandwidth on each and every how can I say that? Each and every what can you call it? Each and every signal that you have now, like if you're listening to us on radio or anything like that, if you're listening to us on 1250 or 1340, they're saying that you'd have an infinite amount of channels on that one frequency. It's not going to quite work that way. If you know anything about physics and Schrodinger's cat, he had another thing called Schrodinger's theory. And basically, you'd actually have +5 and -5, including the original channel, according to his theories. But that would still give you a factor of 10 bandwidth on the exact same frequencies that you have now. So as we go along with more and more connected devices out there, and everybody says that we're running out of bandwidth, they've actually proven this to a, let me go back one slide here, at a distance of 442 meters. Not bad, but it looks like, you know, this kind of technology would give us, especially at this, they basically used very cheap wireless routers, and we're able to get 10 different routers on at one time on the exact same frequency without any kind of interference between them. But literally, it's, when you want to think about it like this. You may have a bolt like a 1/4-inch bolt or a 1/2-inch bolt, but each one of those bolts may have threads. They may have right or left-hand threads, and they may have different pitches on those threads. And that's basically the way to think of it. In using these kind of things, they can have different threads and right and left-hand threads and different pitches in those threads. And basically, they've come up a way, and just standard physics will take you to a factor of 10 the amount of actual signals that you can run in the exact same thing that we use today. So actually a quantum leap in radio technology, and you know, they've already pretty much proved it. They've got it peer reviewed, and actually very outstanding that somebody funded by the original Marconis would come back with an idea based on pasta for actually increasing bandwidth when everybody knows we're kind of running out of it, and it's a problem. AT&T was just willing to spend about $8 billion buying some. When we come back, just 2 weeks after Arrow opened up their shops, and we talked about it on the show, the lawsuits are a-flying. We'll talk a little bit more about this. ABC, PBS, Univisions are all among the group of companies ready to sue anybody that moves. We'll talk a little bit about this when we come back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we were talking about Aereo, A-E-R-E-O. You can go to aereo.com, take a look at it. There's some technology we talked about a week or two ago. And really driven by one of the leaders of cable television. He's put his money behind this service, which is basically a antenna and a receiver DVR that goes on a network, and you kind of own it for $12 a month. At that point, it'll stream anything you want to watch back to your connected device, whether it's a laptop or a tablet or anything else, and that way you could always be watching live television anywhere you go. Their theory is that since they're only capturing it for you and delivering it for you, they're really and it's stored individually on each one of these little devices that they put on the network for you. It's they're not rebroadcasting it per se. But of course, ABC, PBS, Univision, a handful of others are all crying foul and saying that Aero is stealing it as much you watching the Super Bowl on maybe some streaming service that the Super Bowl people, NFL, doesn't want to give you rights for. This sounds very problematic because theoretically they are broadcasting on the government's airwaves or the U.S. citizens' airwaves. and very tough. But it looks like this is going to go to court. I expect this to sail through fairly quickly because they're asking for a injunction so that the service really can't ever get off the ground. So you'll probably have a fairly quick hearing on it. It's going to be very interesting. I think Arrow was asking like $12 a month. If you really spend a lot of time out of your house, maybe not a bad deal to have a DVR that you can remotely connect to. And it's all pretty much, how can I say that? It's all free TV, so it's not like you're watching Cablevision. It's only over the airwaves. But with HD TV now, probably a pretty good signal, not a lot to worry about. And I imagine they're putting their head ends fairly close to, large metropolitan areas. The iPad 3 going to be rolling out next week. Some of the chatter already at a website called The Next Web. Matthew argues that because the expected resolution bump of the iPad 3 would make app file sizes much larger, the app store full of iPad apps would be larger than 20 megabytes. And right now, they have in the iPad and other stores a limit on how big your application can be to be downloaded. So the question is whether or not they're ready for apps for the Retina. And a lot of the carriers already have limitations, so you can't download anything too big. And that gets basically onto our next story. I'll skip ahead here. And that's AT&T actually is coming out with new official throttling rules today. If you've got an AT&T service, you may have gotten a little message like we're showing here on Tiger TV and in the Den. That is, they started Wednesday actually kicking out huge amounts of these text files, warning people that they were getting ready to go over their bandwidth, even though they were signed up for unlimited data. According to AT&T, unlimited data doesn't mean unlimited full-speed data. It just means that we'll throttle you if you use too much. They've always said the top 5% of users, but apparently some people out there on the web have been doing some testing, and it looks like the top 25% of users are getting these messages. They're also trying to talk about limiting the amount of data, about 1.5 gigabytes of data before they start sending these out, and about 2.5 gigabytes of data before they actually start cutting you off or slowing you down to dial-up phone service speeds. This isn't really about network congestion. It's about hammering people with lots and lots of fees. The average bill has come down from somewhere around $120 a month 10 years ago to an average of around $70 a month with data fees, and they would love to get that back up to over $100 per user, even if they have to kick some people out. The margin would make it much bigger, and I think now AT&T's really reached its limit of how many customers they can actually satisfy. They're more than willing to get rid of the people that are using more data than less. We'll come back. We're going to start talking about Navy's railgun, and then we're going to get in some stocks. You can always give me a phone call at 877-927-6648. In fact, this is a great day to do it. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
As we get back, we're going to take a look at a few charts here in just a minute, but we wanted to finish up with a few technical things since we're going to have a special night at TFNN. It's going to be themed for the IBD people among us, basically Kate Stalter and Ken Shreves. Tonight, Ken doing the 4 to 5 hour and Kate doing the 5 to 6 hour. So hang on immediately following most of TFNN.com for the Steve and Kate show. Or Ken and Kate, excuse me. So anyway, one of the last things I wanted to get to, I talked with Steve Rhodes, 2 Friday nights ago. We talked about a railgun, and I had a lot of questions that people emailed me about. And it's I wanted to describe it just a little bit better, but basically it's 2 long poles and along those poles, there are super high magnets, high-capacity magnets. And as a projectile moves down those rails, much like the rails of a train, those magnets are turned on, and they may just be every 6 inches down this rail. But they put huge amounts of power into them, and as it gets to the next one, they turn off the other ones and put the magnet ahead of the object. It has to be a magnetically driven material like steel or iron, something like that. But they're able to move something in the space of about 40 or 50 feet from 0 miles an hour to 5,600 miles an hour, and this object can be 40 pounds. That means that you're basically moving something at 5,600 miles an hour. That's fast enough to cause an ionation, I can't even say it today, ionation field around the projectile, so it actually tracks extremely well. So you could send something from New York to Philadelphia, and it would be accurate to about 100 yards. That 40-pound metal slug at over 5,000 miles an hour would be like 32 one-ton cars hitting something at 100 miles an hour. Now, why this is very interesting is for two reasons. One, as we get better at making railguns, we're also going to be better at making high-speed rail and trains. But also, one of the stocks in the Tech Insider would be very big at this, because you have to basically dump a huge amounts of power almost instantaneously. And there is a technology in the Tech Insider newsletter that we actually own a position in. Very neat for this kind of technology. But they're going to be probably seeing more of these replace the traditional big shells on the battleships or smaller ships. And the big reason is that if you don't have a lot of explosives laying around on your ship, it makes the ship a lot safer. Unless you fire this thing, it's kinetic energy. It's not something blowing up. So it adds a lot of versatility and safety to our men and women in the ocean fighting for us. But it also adds a lot of technology that we've gotten out of the military has gotten into the private sector, and actually fairly interesting. But this kind of technology known as kinetic warfare is really going to be at the forefront as we go after things like embedded installations and people that are building concrete reinforced shelters 200 feet below the Earth's surface. One of the few ways to get to them is kinetic weapons. And this has been, the railgun's been something talked about for 30 or 40 years in the military, and they're actually just finally getting them. So very interesting technology out there. And we're going to get to a few stocks out here. First one I wanted to talk to everyone about was the commodity index and total return index. It's an ETF. The symbol is D as in David, J, P as in Paul. It is a commodity index fund. But I haven't shown a lot of Gartleys lately. I've put a few in the newsletter every day, the daily newsletter. But this is one that looks like it could make one more move up. It has gotten right to an extensive gap, but the target is at $45.10 for a bearish butterfly in these. We've seen kind of a pullback in gold and crude today, but it looks like it might have one more push into it to get just a little higher to complete a Gartley in the commodity index out here. Certainly the energy going up has not been all that bad, so I don't think it's horrifically bad for commodities out here. But it looks like you could have a fairly nice reversal, and maybe down 5-10% would not be a big deal, especially when we saw the action on gold and silver over the last couple of days. But this one's actually putting a Gartley in at $45.10. It got to actually $44.69 on February 29th, and pretty interesting. So we've got that one. There was another one that was very interesting in the Gartley field, and that is the Pacific ex-Japan Index Fund. So this would be everything but Japan. A symbol for it is EEP. We're seeing another one come very close to this level and have a Gartley. These two also, the energy is not all that bad on this way up. But it is making a nice little pattern here that says we might be awful close to topping out in these foreign ETFs. The target for this one would be 45.10. We got to $44.99, so just 11 cents away on February 29th. A pretty important day at TFNN because, of course, it was my birthday. But anyway, the 44.10 volume was actually not too bad. So we could still have a try of that $55.10 high, but we're getting awful extended, and I think the little pullback in gold is giving us a little indication that maybe this is time for some consolidation somewhere between that 43.50 and 42.71 previous highs and lows from December 5th on one of them and November 8th on the other one. So setting up some Gartley patterns, but not Tiger Gartleys. We're certainly not seeing the kind of weakness in these that you would think you were going to see if it was a long-term bearish pattern. The Coca-Cola Company actually had a nice little Gartley pattern and exceeded it, and you can see how these Gartleys work. It is one of the ones that actually did have light volume on this move up. The symbol is KO for the Coca-Cola Company. And if you're doing Gartleys and you can't see this, I'll go through them real quick. The original X point for your Gartley is January 3rd, $70.71. It came down to $65.57 on January 13th. That would be your A point for your Gartley, just standard Gartley pattern. February 7th, we saw $69.45. We did pull back, and here's where it gives you a good indication that you've got weaker volume. Actually, you had fairly significant volume on that same reversal day there. But it comes down, tested on a lighter volume, about 5.5 million shares. That is February 10th at $67.42. We go up to the projection at $69.82. It got to $69.98 and gave it up. So you got your, if you're looking, not a huge Gartley pattern, something that's going to, you're going to see a huge movement out there, especially in a company like Coca-Cola, but a fairly good pattern here. And you can see on the Power Law Vector Indicator just how much weaker the energy coming up was on down. 3.4 on my Power Law Vector Indicator to a 2.4 coming back up. So that even though not much of a weak day out here, we've had kind of we're off about 2.5 points on the S&P, so basically nothing, and the volume's light, 2.8 million shares. Let me check on that to make sure that we haven't had a lot of change in it here. 2.8 and a half. That's going to put us in somewhere around 3.2 billion shares on the downside, where we pushed down today, compared to pushing up with a little over 4.2 billion shares yesterday on the push back up. So I'm still thinking that we've got maybe 7 to 10 days, trading days actually, before we see this market roll over, and possibly a good and huge intraday spike to blow a lot of these shorts out, especially with all the bullish biases we see over the next few days coming. Another one that is very interesting is Lowe's. We've heard a lot about it. It's kind of made its Gartley pattern. Symbol is L for Lowe's Corporation. And we've seen this one. Actually, the energy wasn't as bad as you would like to think, but it did complete a nice Gartley. We'll go through this one fairly quickly. January 23rd, start your Gartley pattern. That was at $39.03. We come down to the A point of the Gartley, and that's January 31st, $37.02. Pop back up to $38.70 for the February 9th high. and back to the C point, which is February 15th, $37.58. And we pop up the projected D target for that Gartley pattern would have been $39.58. We got to $39.47, so awful close to that particular high that the Gartley butterfly predicted, and it rolled over. And, you know, you're probably going to find some support when we see this pullback here today. It is light, but a pretty good indication that you get a good, well, the ABCD ratio was just 1.1, so you're looking for very good symmetrical ABCs, and you know, 10% over the previous ABC is not the previous AB move and the CD move. Pretty nice and symmetrical, which is what you're looking for in these Gartley patterns. One more that looks like it could set up and needs to go just a little bit higher, and maybe we'll see this next week, is the Vanguard European ETF. Symbol is VGK. Dyslexia cure for found. So anyway, what we're seeing in this one is that there's two big gaps that came down. Those gaps came back on October 31st. Is that right? Yeah, October 31st. And you had one actually pop just the day before it. So if you go back there, you're going to see that they came down on fairly decent volume, about 3.5 million shares. We're coming back up into these, and this is a pattern we're seeing a lot of. But to complete this, you'd need to come up to $47.86. We've come up to a high of 46.86. So we still have about another buck to go on this European ETF that shows that as we get back into that gap, probably a good chance on this light volume we've seen over the last, probably 2-3 weeks on this thing going up, that it could bust out and fail here. But the volume is about the same as the original X point, and you'd really like to see this thing have just a little bit more juice. But if we have a decent week next week, I would not be surprised for this thing to come up and make, since a lot of these Gartleys are actually hitting within 0.1% of the actual target price, they seem to be working actually very good these days. So let's go back to some of the other stocks I wanted to talk about that are non-Gartleys. And probably the most interesting to me right now, Xilinx and Altera, is one I showed in the newsletter today. And I was watching for this thing to kind of make a bottom here. And to me, it's actually showing a fairly decent level of support. ALTR is the symbol for Altera. I've always considered these and Xilinx the canary in the coal mine for semiconductors, because if you're really needing to get a lot of product out fast, Altera makes programmable logic chips. We also talked about Altera and Xilinx both using Intel to actually make their chips, and they're going to have 22 nanometer technology within 6 months coming out of Intel itself as the fabricator. This is going to make both these companies have an offering that's even better than they've had before, especially when you get to need to get products to market extremely fast. What I'm looking at in Altera is this huge volume day up, which was on the 18th of January. You popped up on 11.6 million shares. You kind of came back and retested it a couple of times. Now you're coming back with exactly what you want to see, which is this real light volume. But you popped up on that day with 11.6 million shares. We're going to be coming into that today with 3 million shares. Really makes me think that maybe some of these semiconductors are probably done with their pullbacks. And I've seen several that we put in the newsletter today that I think could be doing ABC ups. So keep an eye on that. We'll be back in just a minute.
In In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get back, I wanted to point out one more stock, and that's HPQ. Actually down here, getting ready to test the bottom. Hasn't done it yet. The December 19th low for Hewlett-Packard is 25.02. You had 16 million shares in there. You come down with some fairly heavy volume, 38 million shares on Wednesday, 25 million shares yesterday. Going to have about 20 million shares today. And as we look at these, it just has another dime to go back down. Again, there's a nice gap down there too. But I think a lot of these are probably that have been probably the more stinky of the technology stocks. Look like they're probably getting ready to probably hit some kind of low, maybe Monday or Tuesday. We're going to get a little bit more out of that, but just don't really look on this leg like they have that much farther to go. Maybe they'll bounce out of this and then come back down on the next cycle. But kind of interesting. Coinstar was another one I wanted to point out. Another one that looks like it's trying to break out at these highs. Wanted to check the volume today. Had what I was looking at on the February 7th high, $60.84. That was that huge pop-up. It kind of came back, filled a little bit of that gap. We've tried to bust above this level twice, one with 1.9 million shares on February 28th, and again today we're going to be coming in extremely light. It's just underneath that previous gap. And going to be very interesting to see how this actually all plays out. One of the other things, we've got about a couple minutes. Normally, Tom and I do the technology Tech Insider part of the last of the 5 o'clock hour. We won't be doing that tonight because we've got Kate Salter with her small cap roundup, and we've got Ken with breakout investing tonight. Kind of a special treat, kind of an IBD theme, since both of them used to work for IBD and now both for TheStreet.com. So we'll have a little bit different show for you tonight, but very interesting. I'll be listening on my way home in the car. But we're looking at Coinstar, just seeing these. We've got several of them, but one thing you don't like is these ones that just kind of hang out at these highs and bang away at the top. But anyway, what I wanted to talk about was my Tech Insider newsletter that normally we talk about later on Friday night. I had a very interesting article in it today for my readers, and I won't give too much away. But we've talked about cars like Tesla and some of the other electric cars and green technology. One of the things that I wanted to do, I wanted to get into a battery company. And that company was A1, A-O-N-E. It's actually probably not too bad a looking one, but we'd been watching for a technology announcement from them. It looks like they've probably lost their ability. They probably still hang around kind of like a loose tooth. Eventually they're going to fall out. But I actually discovered another technology, and it's very interesting. This new battery technology gets the kind of price for the kilowatt that everybody is looking for, and basically also the density, power density that everybody is looking for. Right now, we're seeing cars like Tesla talking about their maybe 250, 275-mile range. Using these new batteries that I'm covering at a new company in today's newsletter, that range would be somewhere about 550 miles an hour. It would also knock off about $20,000 worth of the cost of a Tesla, and it also is going to allow electric cars to come in somewhere around $20,000. Anyway, you can always go to the front page of TFNN.com and check out the Tech Insider newsletter. I suggest you do it today. You all have a great night and a safe night, and hang on for Ken and Kate.